This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders, and welcome back. I'm Scott Norse here with your Forex Report for Monday, June 16th, 2008. Well, we didn't see the same dollar in the first 24 hours of trading this week as we saw in the preceding 5 days. The greenback fell in the broad market overnight as oil rallied toward $140 a barrel and gold gained nearly $20 an ounce. Strong inflation talk around Europe was the root of the problem as we begin to realize that the Fed may not be alone in possibly hiking rates this year. We had a mixed bag of economic data from the U.S. this morning as Empire Manufacturing dropped further below zero and TIC data showed very strong foreign investment in U.S. securities. The problem is TIC data is 2 months old and the Empire Index is a June reading. Even as oil fell several dollars and into negative territory today, the greenback found only the smallest bit of relief. Of course, we're not throwing in the towel on the dollar just because it gave up a little ground today. In fact, if you missed the boat on a few pairs last week, it may be circling back to the dock now for you. Technically, we see great potential for euro dollar to test last week's lows around 153 and possibly lower. This could happen inside 48 hours if the greenback finds some traction. The pair is now trading near 155 and may give us some good shorting opportunities here or slightly higher. The Aussie dollar is also coming around to some solid resistance around 94.50. A short trade here or at 95 leaves the downside wide open to 93 if you're patient. The dollar CAD is also setting up nicely for a short trade this week, especially if commodities continue to rally. This is perhaps the one pair we see the dollar losing this week, given its long-term range and reaching the top on Friday. Solid Canadian numbers could bring the pair right back to parity in the short term. Moving away from the majors, we notice that yen cross pairs in particular have seen solid upside activity in recent weeks. We are starting to think this move is overdone and the upside may be limited from here. After all, uncertainties about the health of the global economy are still widespread, and this is not the time when rate hikes should be considered a good thing. Be on the lookout for a yen correction soon. Till tomorrow, have a wonderful night trading. Take care.